Are we getting too hot and bothered about the Volcker Rule? I mean, when it came out, it was a big deal. It's going to revolutionize all of trading on Wall Street. Did it do that? And by the way, is it really hampering that much now?
Well, it did squash balance sheets. One of the things that the Volcker Rule did, as I've spoken to treasurers of banks, for instance, they would carry much larger balance sheets to accommodate customers, to trade on a prop basis. And when the Volcker Rule came in, that shrank their balance sheets considerably. So if you're holding, ABC bonds and someone else issues, you kind of have to sell those off and able to take on that other inventory. You weren't able to hold the both.
And what happened to the whole liquidity debate? Because in the early days, it was, oh, goodness sakes, we don't have as much liquidity because we don't hold that much for our own account. We can't trade it. Is that true? Is that really played out in the marketplace?
It is and it isn't. It plays out at certain times. What the hedge funds and the algorithm traders were tell you is, oh, we would be there to supply that liquidity. Truth is, they don't. They just run away when the markets move, and then you get pockets of liquidity that show up. But in the days of old, when you had money center banks that were making markets, you actually did have proper liquidity. They had to price customers, and you just didn't wait for the price to show up. You had to price the gaps. I don't think we're going to go back to that place, but this will provide banks with a little bit larger balance sheet, hopefully, to be able to accommodate customer demand.